How's it going, guys? This is Forensic Forex Expediente, and I'm back with another video. This is your daily update on Australian dollar versus Japanese yen. The previous episode, we talked about how Tuesday was most likely going to finish and close down. And we said after a down close candle, we could look to buy because that's an opportunity to get into trend with the market. As we can see here, Wednesday, we are already getting that push higher. So if we were buying the next day, we would have found some profitability, right? Or in a perfect scenario, we would have found some scenario to go long to the previous daily high or a swing high formation. You can see how price even today on Wednesday taps right into that fair value gap that we would suspect price to react off of or also create the higher swing low in. So Thursday, I would suspect either it can tap this, but I wouldn't want it to break Wednesday's low. So I'm taking the sense that Wednesday is the low of the week. And I want to see Thursday continue to push higher and trend higher, taking out swing highs, which has buy side liquidity above it. Buying after a down day is generally, right, or ideally a better opportunity than just trying to go long every single day. Until you get that down day, then you kind of have the foresight of understanding, okay, this is counter against the trend. We could buy after this candle, and after buying after this candle, we could potentially see the market continue to trend for the next week or two, or etc. Still looking for price to target this swing high here. In itself, you'll also notice that price created a swing high formation right here. So while the market is trending, it is also making liquidity pools very short term for it to target. You can see it's most likely going to target this swing high and this one here. So that's the 20-day look back high, which is also that weekly high. So you can see that's that weekly swing high formation. And we also can see that there was that sell side raid here on that swing low on the weekly. You see it on the daily transcribe. It took out multiple swing lows. But here on the weekly, it took out one swing low. And now it ran right back up. After taking out that swing low, look how quickly it runs all the way back up here. It does close down still. But does that give us confirmation it's going to continue going down? Not necessarily. We need a lot more data. The daily would tell us the data. And we spoke about it. We said that we saw all the other yen crosses also turn back bullish after rating sell side. And price continuing going up. And also short term, we saw how it broke a swing high after taking out these swing lows on this one day. That one day, look how it wicks all the way down right here. Shoom, right? Takes out all these swing lows here, and then it comes back. And instead of going back down to target sell side, it targets buy side. Fills in this entire PD array here, right? This SIBI, sell side imbalance, buy side inefficiency. It's completely rebalanced. And it continues to go higher. So it has no respect for this, and it has no respect to any order block theory. So the last up close candles before the down move, price does not respect any of those. It runs right through those as well. We can also see, take a look at other yen crosses. So UJ, we got a down day, which is expected. Think about it. We already got a large range cycle candle. It went back into being a small cycle. Most likely would create what? Some type of busy again, right? Another fair value gap is most likely going to form. I'm not saying this is where it's going to look like at the end, but just in theory right now, we got some type of fair value gap. Price is going to do what? Trade into it, try to create another higher swing low formation inside this, and then go long. And that's what I would suspect. So let's just get rid of that. And if we look at some other yen crosses, there it is. It's turn around. Like I said, these were areas we would take an educated guess where the higher swing low would form. We also see that we had one here. Look at that. Right there. You could also see how price takes up that swing high. So the momentum is bullish. And the confirmation of that momentum is the higher swing low. This is a higher swing low. It is confirmed here. So you have more of a greater speculation that it's going to continue trending higher. That doesn't mean it can't turn back around, raid this low, and then continue going higher, because those scenarios do unfold. We're just trying to take an educated guess. As a trader, you understand that there's always going to be risks. Even when you think your technical or your fundamental or your macro analysis is to the T, anything can happen. And we are trying to move with no emotions. We're just trying to be objective as much as possible, not subjective. The more you know doesn't necessarily mean you're going to win trades. Because sometimes the more you know, it's really conflicting because one model says this and this scenario says that scenario, and it's conflicting. So you have to take a stance at said point. Let's move on. CAD down candle. If it finishes down in the next 6 hours, I would look to go long because it's still in a small range cycle. I'm looking for another large candle to appear, and most likely I would want it to go to the upside, creating that higher swing low. Notice, look at the swing lows. They keep going higher, and look at the swing highs as well, right? All these swing lows keep getting higher and higher, while it's also creating higher swing highs to go higher. EJ, small range candle. Look to buy after. If it closes down, you just almost got 20/20 vision that you should most likely see tomorrow to be an up day. And it's Thursday, so it's an ideal trading day. So a lot of things do factor in the way I process the information. GJ, down day. I would look to do what? Going into Thursday, an ideal day, look to probably buy, right? Look for price to target that swing high it just created. What else do we have? Swiss J, still going down. I'm not sure what's going on with Swiss. Swiss right now is getting outpaced by Japanese yen, but that's not a good sign. We want to see this go higher. In this theory right here, 1, 2, 3, it is making a higher swing low. Just want to see if it doesn't raid these swing lows or these clean lows and just gets away from it and runs back up to this swing high up here. Let's see if it gets back up to that swing high or even this one up here. So we'll keep an eye on that as well. And then if we look at the DXY, just briefly, and then we'll look at the yen futures as well. So small range, see? So it wasn't surprising that I saw UJ as well because I saw somebody in the chat ask that, like, what's going on with UJ? And I'm telling them that, hey, you got to look at other factors. Just because you see dollar up or dollar down and UJ up or down for the day, and it's kind of off for the day, doesn't mean that it's completely out of whack, or you got an SMT on your hands. The day hasn't finished forming either. Still got a lot of hours left. So don't really be very quick to take a stance. And then we got, if I could get it to load, the yen crosses. Small day. So it's large, and look how small it is. All right, you would expect that it would stall because these large candles are getting retail traders to go short. That doesn't mean you wouldn't get another large day, right? That doesn't mean price wouldn't give another large leg down. It's just most likely unlikely. Not to say if you flip the coin and it lands on large range cycle again, and today Wednesday it's a large range cycle going down. I just don't prefer that because when I see large candles, I think retail is chasing. That's my ideology. If we could get them to chase, then the next day we stall it on them and make them think it's not going to go short anymore, convince them to go back long, and then I go short. So hopefully this was insightful. Peace.